Hi traders and welcome to the Technical Analysis Market Watch on Friday the 7th of February. So we saw a very enthusiastic start to the week with a lot of gapping happening on some of the key indices and currencies, but a lot of these have actually recovered throughout the week ahead of non-farm payroll. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see the big move that happened really early on. We can see a big move all the way down to actually 60.90. It actually broke the 61 for the first time in a very, very long time. But we've seen for the rest of the week a very big pullback all the way to almost where it's actually started, dropping from a couple of weeks ago, back around that sort of 62.90 area. So really, really good recovery. And if you go to the smaller time frames, you'll be able to see quite a bit of those moves that we talk about every single week. The pullbacks to the 20 moving average and launch, 20 moving average and launch. So hopefully you were able to get a hold of some of those really, really good moves, because that was a very solid and powerful move once it actually did establish that it was actually in an uptrend again and filled that gap that actually caused the momentum shift early in the week. Look, gaps are a bit rarer these days, especially on the major currencies, but they do happen occasionally, and this weekend was certainly one of them. So good to see that it has actually recovered quite well, but really, really good opportunities. Even if you were actually trading on the smaller time frame, you would have seen on the 15-minute chart that you would have got even more opportunities, and you can see all of the pullbacks to the 20 moving average all the way up. They were all giving you opportunities to jump in on what is an existing mini trend that has changed. And the good thing about this one was that it's already at a very strong support zone that we already established last week. So we knew that there was very strong possibilities that we were going to see support at this level here. And the market was slowing down, and now it's trying to push up. Now, the 50 moving average and this previous high here around that sort of 63 is the target that you need to break before we start to go any longer here. I would be looking at that to break before we'd actually join in on any longs. I think you probably should already be out really on any trades that have gone up, because this is the area that I'd be taking profit. So if you're not out, around that sort of 63-cent mark would be the level that I'd be looking at taking profit. But once that level breaks and comes back and tests it from above, they're the ones that I'd be looking at getting involved in to try and get it back up to that 64-cent mark, which is the next resistance zone for it. Failing that, if it rolls over and daily closes below the 20 moving average, so around that sort of 62.5-cent mark that we can see here, then we'd look at moves back down to that 62 flat. So really 50-point moves either way on the Aussie are the optimal scalping zones at the moment. But the momentum is actually long again now that we've actually seen the support here being respected and trading up against it very, very quickly. So the bias is probably to the long, but again, if we get a daily close below the 20 moving average, we would certainly reconsider that move. Both of them are definitely an opportunity if we get those daily closes. All right, we'll move over to the US dollar CAD now. And again, this exemplifies the massive move early in the week, as you can see, but it gave it all back and it finds itself right at the support zone. It's tested this level several times now, and you can see right on the 143, very, very heavy support. 4 or 5 times it's touched it here. It's a real do or die level for it now. You want to be making sure that it can hold. If it doesn't hold at this point here, the next zone is around that 141, which is 200 points away. So really, what we're looking for is a bounce off this level, a series of higher highs and higher lows on a smaller time frame. And if we get that, then we're looking at the targets at around 144.50 as the first initial move. That's where all of the resistance is. And then that's probably all I would do at the moment. I wouldn't go much further than that, because the other move was an exaggerated one. So I'm probably just going to ignore that one for now and look for these highs here as the target for the long. All we're looking for is a series of higher highs and higher lows on a smaller time frame, and we would get on board with that trend. If we get a daily close, however, below this level, so below that 142.70, a daily close below there, which is the low of this candle, and then we'd start to target the 170 points from there to around that 141, because at that point, it's broken the support, and we're looking at a new established downtrend. So we would be waiting for that to actually happen, though we wouldn't trade that, of course, until it did. But that is the ideal move for the CAD in both directions, and both targets are relatively stable. All right, we'll go over to the US dollar yen. This has continued as promised to basically get down to that around that 151. You can see that a little bit mixy at the start of the week, but it hit the 20 moving average and quickly started to sell down and continued on its merry way. Even as the everything else was going a little bit crazy, we've got a big doji here. It was relatively stable, but maintaining its level underneath the moving averages. So look, we're about to get a 20-50 moving average cross. You can see that not much is going to stop this now unless we get a massive recovery very, very quickly. And it is looking quite dire. So I think 151 is still the target, and hopefully you're able to take advantage of that because it's pretty good trading. If we go to the smaller time frames, you would have seen that we've had series of lower highs and lower lows all the way down. You can go right back, actually. I mean, it's been very, very good to trade. And you can see here, even most recently, the swings have been very, very solid. So, yep, still targeting the same level. Haven't changed our view on that. And if anything, that 20-50 moving average is probably going to help it. If we see a pullback to around that 153.50 and it does recover a little bit, look for that to be the reversal zone because potentially I could find resistance there and then keel over and push down again. So don't be too worried about that. I certainly wouldn't trade that as a counter trend because the strength in this trend is too strong. But what I would do is if it did get back up there and start to roll over, I would use that as another entry point. And then, and if the moving average catches there quick enough, you might be able to get that as resistance as well, but that's still a bit away. So it's going to take a few days for that to happen. So still targeting the 151 on this one. Nothing short of a daily close above 153.50 would have us going long on this one just yet. All right, we'll move on over to the US dollar yen. I'm sorry, the US dollar itself. We can see the dollar index has given us some pretty crazy moves as well. Big move up to all effectively nearly the 110 mark. Look, it's one of those ones where you say, if we see a break of this level here, we know that our next target's around that sort of 106, a pretty solid target as well. This was an unusual week. Like, it obviously had that big breakout early in the week that pushed up, but that was just consistent with the rest of the world market. So we're not going to read a hell of a lot into that. It reached a level, as markets generally do when they are in panic mode, that was previous resistance or support in other cases. But this one sold off fairly quickly. It's at a do or die level again. We know around here that 107.50 is a very, very heavily defended zone. We've got resistance here and we've got support here. So it's a role reversal pace here. If we see a break of this level, 107.50 with a daily close, I'd be starting to target the 106 move, which of course is going to equal along on the euro. So we'll jump straight into the euro now because that's the one we're probably going to be trading. You can see that same thing. It came down, hit the support level at around the 102. Big sell-off, and has recovered all of that throughout the week, and then some. Pulled back a little bit this week, but it's struggling to get above that 20 moving average. So when it does get above that 20 moving average, we can start to look at long opportunities again. Firstly, up to the 104.50, and then targeting the 105.20 again, which is this next resistance zone for it. Looking strong on the euro, I think. It's had a really, really good bounce off. You can see that we've got obviously a good reaction off the candle from the start of the week, and it's pushing up higher. I would not probably go any longer on it until it gets above that 20 moving average, but when it does that, I'd be looking for longs up to the 104.50 in the first instance, and then up to the 105.20 or 30 area, which is around this zone here. If we roll over and it's trading below the 20 moving average, especially if it's doing that next week, if the daily closes below the 20 moving average at the end of the week, and that's where we start on Monday, I would be looking for a move back down to these lows at around that 102.70 area as the scalp opportunity. All right, and we'll move over to the S&P 500. Look, this has been no different to the others. Gap event in the at the start of the week and pulled up very, very strongly. You can see on the smaller time frames, it's had pretty good trading all the way up. You can see the higher low sequences. 15-minute will show you the same thing. It's been very, very strong all week, really. Once Monday was out of the way, it's basically pulled itself up to what is effectively a level close to its resistance. We know that it's getting very, very close to its all-time high again. I would be looking at it as an opportunity. Non-farm payrolls is this week, so we must be mindful that we're probably going to see a bit of flattish action over the next 24 hours. But look, if we it's pretty simple in my mind. If we're above the all-time high on Monday and that's trading that way, I'd be looking for long opportunities for about 30 to 50 pips. But if it's below these levels and it hasn't been able to actually crack on through and make a new high and starts to roll down, I'd be looking and targeting around that sort of 58.50 to 5900 again, because yeah, it's had a chance to get up there, and if it fails again, I'd be starting to get a little bit concerned about it. So really use this as a guide. Let's see what non-farm payrolls gives us, and if we're trading above the all-time highs and we're sequencing higher, we'll look for longs. And of course, if we fail to make that high and we start to sequence lower, especially if the daily closes below the 20 moving average, we'll start to target that 59.50 and 58.50 in that instance. So I hope you've had a great week's trading. It started off a bit rocky, but we saw some pretty good trends established throughout the week. So hopefully you're able to take advantage of some of those. Just remember, it's non-farm payrolls this week, so the market might be a little bit sluggish in the next day or so. Have a fantastic weekend, and I look forward to seeing you all next week.